Hey, what's up guys? Welcome to Bits and Pennies. Today, I'm diving into a strategy that can help you generate steady income from the stock market, just like rental income from real estate. We're talking about Nifty Bees covered calls. So, let's break it down step by step. Alright, first things first. What are Nifty Bees? Nifty Bees are ETFs that track the Nifty 50 index, which includes the top 50 companies listed on the National Stock Exchange of India. Essentially, when you buy Nifty Bees, you're buying a piece of these top 50 companies. They're a great way to diversify your portfolio, but we're going to take it up a notch with covered calls. So, what's a covered call? Simply put, a covered call is when you own a stock or ETF and sell a call option against it. This gives the buyer the right, but not the obligation, to buy your stock at a specified price within a certain time frame. In return, you get a premium, which is basically instant income. Sounds good, right? Now here's the magic of combining Nifty Bees with covered calls. Since Nifty Bees are less volatile compared to individual stocks, the risks are lower. Plus, you're leveraging the stability of the top 50 companies in India. By selling call options on your Nifty Bees, you can generate a weekly income. Think of it like earning rent on a property you own. Let's say you own 100 units of Nifty Bees. You can sell one call option contract for every 100 units. If Nifty Bees are trading at 200 INR, you might sell a call option with a strike price of 210 INR expiring in a week. If Nifty Bees stay below 210 INR, you keep the premium and your Nifty Bees. If they go above 210 INR, you still keep the premium but might have to sell your Nifty Bees at 210 INR. Either way, you're making money. The key here is to manage your positions and strike prices carefully. You don't want to set your strike price too low and miss out on potential gains. On the flip side, setting it too high might not earn you much premium. It's all about finding that sweet spot. And don't forget, this strategy works best in a sideways or mildly bullish market. In a bear market, it might not be as effective. Always keep an eye on market trends and adjust your strategy accordingly. So, there you have it. Nifty Bees covered calls can be a fantastic way to generate steady income every week. It's like having a rental property that pays you without the headaches of being a landlord. Just remember to do your homework and stay informed. If you found this video helpful, smash that like button and subscribe for more finance tips and strategies. Comment below if you have any questions or want to share your experience with covered calls. Thanks for watching and happy investing.